brought stripes and bright stars through the perilous fight, o'er the ramparts we watched were so gallantly streaming, and the rockets' red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the lands of the free and the home of the
Good morning, streaming live on Rumble, X, and YouTube every weekday, 8 a.m. Eastern Time. This is World HD. Today is Tuesday, October 21st, 2025. Our goal in here is to use the harmonics and markets to work toward getting a jump on what is really going on in the world. And I think today we can do that with the fixed income market. So we're going to look at the debt markets today and talk about what's going on with rates and bring this together with the Federal Reserve and the employment and the lack of data coming through because the government shut down, and the CPI release that's going to come out on Friday, later this week. I think it's slated for Friday. And what does this mean, right? What does this mean for investors? What does this mean for older investors, right? Fixed income investors. And, what does this mean for the stock market too? So we'll look at stocks, we'll look at debt. I want to take a look at the soybeans. I don't think we looked at that yesterday. Take a look at that. And kind of see where this whole thing is on China as well. So always trying to pull things together. All right, so let's dive in here. One more thing is last night we did, Aaron Day did I didn't do much on it because he had some connectivity issues, so I didn't get a chance to come in there and add too much to it. But he did a really great job on covering the healthcare situation, and we're going to do a roundtable on that tomorrow, and then I think he's going to do some more on it with Thursday with Mike Adams, and I think we're going to continue this for a couple weeks because this is a big deal going into the end of this year in the healthcare enrollment situation. People might get hit upside the head with this depending upon how the government shutdown goes. So wanting to see where we stand on that whole thing. And this healthcare thing's pretty devastating, really. When I watched this last night, I was out and about, for the first part of it, doing some carting of my daughters around and stuff like that. But when I was listening to pretty much the whole thing, and it's a pretty devastating, pretty negative situation too on this healthcare front. I think that it's so again, we can look at this from a strictly financial angle. We can look at this from a free speech angle, a religious angle. We can look at this from a lot of different angles, and then you can take the healthcare angle. And when you really look at this, I mean, it's the technocracy, right? I guess that's what the center for me a lot of times right now is this technocracy. And because of all the, the AI, all this stuff that's going on. And when you see the story that Aaron told last night with healthcare, going all the way back through the Rockefellers, even before that, and how this whole thing has been set up and orchestrated to make human beings more like machines than free thinking, free will people. And and so this fits right in with that technocracy situation. And it's pretty devastating. And you have to just sort of take a deep breath, pick yourself up, strap up your boots, and move forward because it shakes the things that we think, these supposed founding, wealthy tycoons like Rockefeller, and then the transfer of that into the Gates Foundation, from one foundation to another foundation. So the pedigree is there, the transfer, you can begin to see the transfer taking place from one, I guess, regime to another regime. And we always wonder how that happens. If this technocracy movement's been going on for 100 plus years, maybe even longer than that, how does that happen? How do they transfer that from one generation to another, right? And we can see it. You can see little bits and pieces of it if you want to look for it. All right, so I'll dive into that a little bit at the end, but that's going to be a focus of mine for this week. Okay, so let's take a look at this. We had the earnings data out, and I think I've got a problem with one of my switchers here. There's always something every day. So I think what we'll do is I think I can get to it. Let me do that. So again, we have earnings out this week. Let's kind of go through this. So GM earnings out. I don't know if they're out yet or not. Let me see if there's anything out on that. I don't see it. It's probably going to come out later in the day. I haven't seen it hit this morning. Okay, and let's see. There we go. Okay, well, that doesn't work either. All right, the nowhere works. Okay. I'm not. Anyway, okay, know me on this. All right, GM, Tuesday, we get Netflix that comes out. Wednesday's Tesla. Thursday's Intel. And then the CPI report on Friday. And then this one is the big tech stuff right here. So this one just has the big tech in focus. That's going to be Netflix. Tuesday, Tesla. Wednesday, IBM. Thursday, Intel. I think it's Thursday. Let me just see if I can clear that. Yeah, it's Thursday. So and this is setting up for the even bigger earnings next week, which I think is this will set the stage. And keep this in mind as we talk about, the tech space and the technology stocks, the Nasdaq versus the S&P and the Dow. Remember, we don't have a harmonic structure in this. We don't have a harmonic structure in the Dow right now. We have it in the Dow, we have it in the S&P, we don't have it in the Nasdaq, which is pretty interesting to me because is it telling us something, right? Is it telling us that maybe the transfer is going to take place out of the tech into other stocks? Could the Nasdaq see pressure based off some of this? Right, I think most of these tech companies are going to beat or meet earnings, but are they going to beat enough? Okay, because the expectations are pretty high. And what could carry this market through? Okay, that's the other thing is if that's going to lose it's been losing the leadership role, but if it's going to continue to lose more of the leadership role, what's going to step in and take its place? And that's the topic of today, right? 50 basis point rate cuts are now on the table for December. So October's baked in with no data coming through, the CPI this week on Friday, and then and we're going to get more data and this will probably, I don't know if this is going to kick up the data or not. And let me talk briefly about that. So when we don't have a lot of data, and then we're going to get data on Friday, the CPI data, to me it seems a little bit dangerous because we don't get the lead in, we don't get the on ramp onto the highway, we don't get the PPI, which is normally the on ramp to that, and then we don't get. Are we going to get the off ramp of CPI data on the backside? So it's kind of like roulette, right? On Friday, we're going to roll the roulette wheel and see if they're going to come up on red or black, more than likely, right? Unless you get the green, which is rare, but happens. Okay, so if that's the case, then if it's very high, right, then what kind of inflation is it? And we talk about those different types of inflation. And I'll get into that a little bit more when we get into the fixed income side of this. But my big concern is this, that we're going to probably get a data point, and that's all we're going to get. And the markets are going to probably overinterpret it one way or the other. And does it lead to more of a case for 50 basis point rate cuts? Because if we start getting that, then it's probably going to drive the stock market higher, right? If the market sees the idea of a 25 basis point rate cut at the end of October, then another one in December, actually 50 in December, and then sometime January, February, another 50. Because if the Fed's going to do 50, they usually don't just do a 50 once and then they're done, that usually doesn't happen. So this is what we're talking about with that terminal rate, okay? It was set at about 3% with the idea that we were going to slowly trickle down from 4.25, 4 down to 3. And then we watched those clips with Paul Tudor Jones last week where he was saying he thinks the terminal rate shifting to 2.5. We pretty much agreed with that. I thought they, at least I was pretty much in agreement with that could happen. Now we're shifting from this 3 down to this 2.5% terminal rate. And this is what would happen. If we're at 4, let's say we're at 4 now, we do 25 and then we do 50-50. And we're probably likely to do another 25 maybe in February. So if it went 50 December, 50 January, 25 in February, they could be there by the end of February. And you're talking about pretty big rate cuts. This is what President Trump wanted, lower rates. This is what Stephen Moran's been pushing for. And this is what the Fed may end up giving, especially with the new Fed chair coming into place. So the new Fed chair might actually come in January, February, and there's nothing to do, right? The work's already been done, okay, prior to them coming in. And then this is that case where at that point, what does the Fed do? They're probably locked down. And this is what Moran said. Low interest rates for an extended period of time. Okay, so I would think that they would just hold interest rates there for a long extended period of time. What does the stock market do with that? What does the bond market do with that? Both of them probably rally and rally significantly. A rally in the bond market means lower interest rates. What if we still have inflation? Okay, that's the big question. What if we get this situation where stocks go higher, okay, asset inflation, we get some kind of tariff follow through, a little bit of push through. So that now gives us, some kind of, remember we talk about asset, demand, and currency. What if we get some kind of a transfer through this tariff? What if the tariffs do bring some form of inflation through corporations having to raise prices on things? What if we do get some of that? Now we get this massive inflation. And the question is, do we actually know how to read that? Okay. Will we actually, because this is why it's important to break that inflation apart into 3 different parts, because we might get asset inflation through the stocks. We may or may not get currency inflation. That's why we're watching this dollar so closely. And then we're talking about other forms of inflation trickling through the tariffs and so forth. If that starts to happen and interest rates are that low, guess what that's going to do for fixed income borrowers? Inflation rate might be 3.5%, 4%. Interest rates are at 2.5%. So they're running it. So if you put your money into a safe investment at 2.5%, you're falling behind 50 basis points or 0.5% just with inflation alone. Okay, so the cost, and it might even go higher than that. What if inflation were to go to 4.5%, 5%? Now, President Trump said, don't expect inflation to trickle through these tariffs and so forth. But if it does, right, if that's incorrect, okay, and if we do get that inflation trickle through, older investors are going to be they're going to have to do something, right? Because the inflation will be eating into they've had it great for the last few years. Interest rates, inflation was sort of coming. We had that big spike in inflation, after Trump 1.0. And that hurt everybody, right? No matter who you were, that's a hit on the general public. But then inflation has been coming down, and interest rates at least stayed high for the fixed income investor, right? And that's typically the older investor, right? That's, in retirement or approaching retirement, and they're in a safer investment. So they got the benefit of that the last few years. Now, they didn't get the benefit of that from 2001 really until 2020, in that time frame, right? Because interest rates were held so low, especially after the real estate crisis. So this is what we're talking about on Fixed Income Day is what is this going to do to the consumer? And then keep in mind the healthcare thing, okay? Because I think that's going to connect with all this stuff. Maybe not today, but as we go through this week, I think it will connect. Okay, so let's go and let's keep rolling here. I think what I'll do is just see if I can bring this up. Here we go. There. And I think I'll just run it from here. Okay, so let's take a look at some headlines for the day. Actually, look at some of the economic data. So that's the earnings that we can expect out. Hopefully, that's tied in with the concept of the earnings in the big tech that are coming out this week. Okay, this week this China foreign direct investment year to date. I think that comes out a little bit later today. I don't think that's out early in the day. I want to say that is. Let me see if I can see it. I thought that was later, surprisingly later in the day. Let's see here. Yeah, I can't see it. Did they pull that off there? Yeah, I'm not seeing any of the data come through on that, but I want to pay attention to that. Again, back to the China thing. Okay, and then let me just throw myself down in here. Okay, then we have we get 30-year bond auction out of England, and did that come through yet? Let me see. Yeah, so that did come through. So it was expected at what, 5.48, and I'm not sure why that's on there either. Okay, let me go back. All right, there. We had that little tag on there. Who knows? Okay, so the UK 30-year bond auction was expected at 5.48% and a 3.1 bid to cover. It came in slightly lower at 5.29 and a bid to cover slightly higher. So again, people showing up to buy the debt. That's great. No problems with that auction. And then Lagarde speaking today. Canada CPI out at 8:30. So we'll see if there's much of an impact on that. That goes back to the inflation. Again, Canada, we did a thing yesterday on Canada, kind of walked through what's going on there. Look at their CPI, look at our CPI, see where that falls by the end of this week. See if we've got a theme there. Okay, and then Wednesday we get the UK CPI coming out. That'll be interesting. And then we get Canada retail sales, keeping an eye on that. And then to end this week, we get the German flash manufacturing PMI, US CPI, expected on Friday. And then the US flash manufacturing PMI. So a couple good data points at the end of this week. We'll see what happens. All right. See if this leads into that case of the 50 basis points. All right. So what I want to do is go right onto the headlines here. Government shutdown day 21. Okay, that's going to continue. I wouldn't be surprised. Today's the 21st. We've got probably another 1 to 2 weeks of this shutdown. I don't see much movement on it. We'll see where that plays out. Cyber attack follow up. So yesterday we had these. Last week we ended the week on with a cyber attack that had an impact or was on the verge of having an impact on $4.3 trillion worth of U.S. municipal bond debt. Was one little headline, didn't get much coverage, but concerning because it's a big number that can have huge ripple effects through the system, right? If something happens with this municipal bond debt, municipal bonds, we've got different parts of the bond market. We've got agency bonds, we've got municipal debt, we've got treasury debt, and then we just have general, corporate debt, and then we have consumer debt. Okay, so those are the different kinds of debt, and people are investors in all that, like credit card debt or banking debt. Obviously, the banks are the big players in that, and that's where it will trickle through, right? The earnings through the banks. Corporate debt, very similar, through the big banks, usually through Wall Street, they have big corporate debt offerings. Agency debt, same kind of a thing. Municipal debt, right? Typically pension funds or a lot of pension funds, insurance companies, and a lot of older investors will invest in municipal debt because it brings tax savings. And then we get just straight up government debt, right? Just the debt we hear about, the 37 trillion, the new issuance there. Okay. If we get ripple effect, if we get some sort of a cyber attack in the municipal debt, it could be sort of a stealthy type of a thing that could have a ripple effect, and people may not even, the general public may not even figure out what's going on for 3 or 4 days until something like that happens. What would happen with that? I don't know. I really don't know because I don't know they don't give us much details on it. I just know that that's a big deal and it didn't get much coverage. So watching that, then we see this Amazon Web Services yesterday. One of their cloud systems was down and had a big effect through what we say 12 corporations minimum, and I don't know what the fallout was on the day. I didn't hear a whole lot more on it, but it was a big deal, right? It did have it was disruptive. Okay. Is there something bigger going on? Are these just one-off events, or is there something bigger going on with the cyberspace? Okay, are we in for some kind of a cyber attack coming up? We're always on alert for these false flags because we know it almost feels like one's due, right? And so would it be a cyber attack? Right. And then I wanted to look into this just a little, talk about this just a little bit, again, from the debt side and the currency side of things. So we've talked about this, what's going on in South America. And Venezuela's in play. Brazil's always in play down there. Colombia, President Trump was cracking down on Colombia the other day, talking about no aid to Colombia. And then we have obviously Argentina and this $20 billion swap line that we've been talking about for the last couple weeks with Malay and trying to support Argentina. There's a lot of reasons for this. I mean, it's a big, long story that I'd like to go into this week still and talk about that. But the point is this, that the banks, again, back to the U.S. banks, right? They're kind of hunting for the collateral to be a part of this $20 billion swap line. If they can't come up with it, then the government's going to have to do this. So the government would love to push this off on the corporations, the banks, to do this swap line, right? Basically provide dollars to Argentina. Argentina provides pesos. If not, then the government has to go out on the open market and basically take in these Argentinian pesos. So this is going to be interesting to see. Again, wait and see. We're watching to see what happens with this whole situation on this $20 billion swap line. And how is it really going to be? That's a big number, right? $20 billion is still a big number. And how are they going to play this thing out so that they can drive the activity that they want, get the result that they want, but then also not try to leave a government, stamp on it, right? That's what they would love, is to not have the government have to have having run this whole thing. Okay. Even though Scott Bessent's clearly driving this thing. Right. So that's continuing to watch that whole situation unfold. Right. And then we've got this one. Okay. This Venezuela update. And I want to run this clip on this with Rand Paul. You may have seen this one, may not have seen it, but he's talking about blowing up these boats. Okay. And the reasons that this may not be such a great idea.
I want to ask you about what's going on in the Caribbean, Senator Rand Paul, and specifically when it comes to Venezuela. And you've been outspoken about this. You commented around fears of extrajudicial killings following the first boat. We've now had 4. Your concern about the president's actions here, is he looking for regime change in Venezuela?
I don't know, but we did discover today that the Coast Guard, when they interdict boats, it's a common thing off the coast of Miami and California. Yeah. About 25% of the time, the boat that they board doesn't have drugs on it. So they have made an error, but they don't kill them. But we've blown up 4 boats now, and if the percentages hold true, did one of those 4 boats not have drug dealers on it? If they all had drug dealers on it, the first 11 they killed, what were their names? What was the evidence linking them to being part of a gang? So I think there's a lot of unknowns here, and I don't think you can have a universal Coast Guard policy of just blowing up boats before they're interdicted. There's, decades-long history of how we board boats. We say, halt, stop, we will board your boat. Mm-hmm. If they don't halt and stop, there's an escalation of use of force. But we don't just blow ships up. So there is a real problem, and yes, I think it might lead to regime change. And some of the more skeptical among us think that maybe this is a provocation to lead to real regime change, a provocation to get the Venezuelans to react so we can then insert the military. I hope that's not true.
Well, I know you're very familiar with these rules as chairman of the Senate Homeland Security Committee, and there's been a question more recently about whether there's a congressional answer to this. Would you support a War Powers Act with eyes on Venezuela?
Yes, I will co-sponsor the War Powers Act later this week, and we will be discussing this on the floor. I think it's one of the most important debates we have. And the idea that you can kill someone who you don't know their name and has had no process at all, people say, oh, you're going to give due process to fentanyl killers and all of this. Even in our country, 20,000 people commit murders, and as angry as we are, if it were my family, I would, want to shoot them. But we still have trials because occasionally the accused is found innocent and not guilty. Occasionally we make mistakes, but we can't have a policy where we just blow up ships where we don't even know the people's names. It can't be the policy for drug interdiction, either in the country or outside the country. So I will support a war resolution to say the government shouldn't be doing this.
Well, that's news, Senator, and really interesting that you're going to put your name on this. Do you have other Republicans who will support that legislation?
There will be people quietly who will say it's the right thing.
Okay, so that's one perspective on this, and there we go. So that's, oh my goodness. All right, there we go. Okay. So that's one perspective on this from Rand Paul on how to handle this. Now, there's a lot going on down there in the maritime space. We've got China in the seas down there fishing and destroying, all kinds of marine life population, right? Squids and everything. So when you take that away, it takes away the dolphin population, takes away this, you get a bad ecosystem. And this stuff doesn't get covered. Okay. There's a lot going on in South America where China is exerting a lot of influence from maritime space, like I said, from the fishing space. And then obviously we have the drugs, okay, the drugs coming across. And we don't know. Maybe they know. Maybe they're tracking the stuff. Remember, they have great intelligence, GPS. They probably do know whether this has all the indications that it is a drug carrying vessel, okay, even though these things are small. But Rand Paul makes a great point, okay? What are we doing down there? Are we pushing for regime change with Maduro? And everything seems like we are, okay? And we, and again, Brazil with the whole tariff situation, and there's different ways of going after different things. So what we see is a swap line going to Argentina, okay, to help them continue doing what they're doing. We see Brazil tariffs being applied because Lula da Silva is probably not the true leader of the country, and it probably should be Bolsonaro, someone like that. Okay. Then we have this Venezuela situation, right? There's so much stuff going on there with this Machado. If you remember, that's the one who I think got the Nobel Peace Prize, okay, who probably should have gone to President Trump, okay. And this Nobel thing's kind of a farce anyway, but nonetheless, it's everybody knows the name, and it's we don't know what's going on with that. Does President Trump really want that Nobel Peace Prize or not? A lot of people say his ego's huge and he wants it. But this Machado essentially got this in Venezuela, and there's a lot of I think the biggest driver down there is China, okay, trying to remove the pressure that China can apply through South America. But there's a lot of other things going on. There's a lot of energy down there, these rare minerals, and just basic minerals like copper, right? There's a huge amount of copper stores down there. There's obviously agriculture. So there's a lot of stuff. And then you get the whole, who's moving around in that space down in there through the Panama Canal. There's so many things going on in that space. And Maduro has been a problem for a long time, right, in Venezuela. And the question is, so far, Maduro's shown quite a bit of restraint because I think they're trying to be protagonists to have Maduro make a mistake, and then it gives them an easy excuse to go in and take out that regime, okay? But it does look like they're looking for regime change here. And why would they be so aggressive on these vessels? Is it only for the drugs, or is there something else going on here, right? Are they trying to provoke something so that they can get the regime change? And I think that's kind of, if we read between the lines, what's going on here. Okay, so I wanted to go through that and continue this look at South America, right, as things come out. Okay, and then we've got this gold and silver. I hope I have Takaichi on here. Let me just cover this thing with Japan's Takaichi. So she did become the prime minister, and I didn't know if that was going to go through. Okay, the LDP, started to be broken apart. Nonetheless, long story short, she became the prime minister of Japan. Now the meeting for the end of the month will be set with President Trump. I don't know when that's scheduled, but I've heard that is in the works, okay, that's scheduled. So that can now go forward. The relationship that the U.S. has with Japan can continue from a defense perspective, from a commerce perspective, and then just from a, again, control perspective over in that region. And so, but here's the question. We've talked about this multiple times. Is this Takaichi now going to be used for, again, another woman, first woman in charge in Japan? So again, are there bad things to come in Japan? And it's a lot easier to have a woman in place there because it's a lot harder to get angry at a woman. That's the only reason. I'm sure is just as well equipped as Shinzo Abe was, or for sure than Ishiba was, the last prime minister who just got taken out. Okay, so again, I'm sure she's qualified. That's not the point. The point is she going to be harder to attack in that situation? And how does President Trump respond? What kind of relationship does he build with her? That's going to be an interesting thing to see now that this is moving forward and that they are scheduled to meet. So again, another big thing to watch there. Okay. And then we've got this gold silver. And so gold, I want to look at this chart. Let's how can we do that without this thing? let's go in here. Let me get this. Let me switch this over real quickly to gold. I want to take a look at this. We haven't looked at gold in a couple of days, and okay, here we go. Hopefully now it's available. All right, let's go there. Okay, so that's actually the treasury market. Let me get this. Okay, here we go. All right, so we've got this somewhat bigger picture on gold. And okay, so this is gold. This is a 25,000 flat tick chart. So it's not time based, but it goes back to mid-July, right back in here. Okay, so that's mid-July. So we have this sideways period through July, and then gold breaks out. And it's been very, very strong market since then. Okay, it's barely even tested its moving average. A little bit of a test right in here. Let me switch that. Let me go to these squares so we can see this. So we got a pull back into here. We didn't even get a pullback. You can see it hasn't even pulled back into the moving average until now. So this is only the second time since mid-July that this thing has actually tested a pretty aggressive moving average, right? So this is an aggressive moving average here. Okay, this gold one, right? Hopefully you can see that gold moving average going up there. It's basically where those pink dots are at. Okay, that's the pretty aggressive moving average. And this one back in here was 1st of October. So we had a decent pullback then. Okay. And then we talked last week about this Societe Generale. All right. They came out. And so when I'm listening to these analysts, after a while, you sort of can listen to what they're saying, and you know when they're just spewing what the system wants them to. Okay. What the corporate, if they're towing the party line, if they're saying what the company wants them to say. So again, what do the people at Societe Generale want them to say about gold? Why do they want them to say that? Because they're in the process of buying or selling gold, whatever, right? So again, there's an agenda, right? So are they following the agenda, or is he saying something, or are they saying something of importance? Last week he came out, and I should probably pull this clip because he was talking about this $4,400 level in gold. And that they'd had this target for a while, and you sort of read through it that that he knew something. Okay, there was something going on out there, and sure enough, that day the 4,400 level's getting hit, and we see it come off $200 in gold. Okay, so that's what we're seeing up in here, right? This spot up in here, we see it hit, basically almost hit 4,400. It comes down to 4,200 on Friday of last week. And then what do we get? We come right late in the day, the thing bottoms out, and it just starts straight back up again. Okay, all continues into Sunday night on the reopen, and then Monday. Okay, all yesterday. Gold rallies back up to 4,400. And I think this time it actually did hit 4,400. If not, it came up just short. I think it was 43.98 maybe. I don't see. Maybe there was a 4,400 print. I'm not sure. But the point is, 4,400 once, sells off 200, back up again to 4,400 essentially, off again. Okay, it's making its way down to this moving average right in here. Okay, so it's here's the thing: are we going to chop here sideways? This has the potential to be a 200-point range going sideways for a period of time if this 4,200 can hold. So 4,400, 4,200, it's been established. What? We've got a high, we've got two highs, and now we have two lows. Two highs at 4,400, two lows at 4,200. This does the global system know something? Remember, Societe Generale is located in Europe. Okay, there's a lot of issues right now with silver in terms of lack of holdings. You get into all these complicated things. We get backwardation. We get, people wanting to hold gold. What are the lease rates? The people wanting to hold silver. What are the lease rates there? Gold and silver are quite different. Silver has that industrial component. Gold is mostly just a currency, a store of value, less industrial, more precious. Okay, more of a holding, right? Gold's gold, right? It is what it is. It's the holding zone, right? It has been for a long time. People try to hold wealth in gold. Silver has that same component, but it also is more industrial. So you've got this industrial component with silver. It's got two. It has the precious. It also has the industrial. And so because there's a lack of supply, okay, temporarily at least, And it gets a little complicated because people are pulling it out of the ground. Do they want to pull it out of the ground? Is it expensive to pull it out of the ground and store it? What are the storage costs? Okay. How expensive is it once you pull it out to have, once you deliver it and they store it, how expensive is it? Right. And that gets into lease rates and holding it and so forth. So there's a lot of complicated things going on here. You can't really tell what's the truth because these banks can do funny things that hold this silver and gold for periods of time, right? They can do funny things with it, with derivatives products and so forth. The question is that the Credit Agricole guy, the Society Generale guy, right, that was out talking about this 4,400. We talked about this last week. Is that going to be a potential hold-up zone, a stopping point for gold on the upside? And it looks like it is. Okay, it's hit it once, come off, hit it twice, come off. Now, will it break below this level here? Let me just clear this out. Well, let me just leave this. So this is the area that's in play. All right, this kind of an area here. We've got this 4,200, and then below that, we have this next level at 46, or I'm sorry, 40,500, let's say, 40,800, something like that. So now we're talking about 4,200 down to 4,085. So you're talking about another, 120 points in play. It's bigger than that. It's another 200. So we're talking about, let me look at this. We've got 200 down to here. Okay, and then we've got another potential 200 down to here. Okay. Are we going to go sideways? What's the range going to look like? Once it gets established, are they going to hold it in here for a while? Why would they want to do that? Okay. Back in the 80s, after the big push up in gold, okay, the market went sideways for a long period of time, like 20 years. I don't think that's what we're going to see here, but what they loved about that was they could put collars around the market. Okay. They could sell the calls and when it was at its highs, okay, with the idea that it was going to break out. Because why? Because people had a memory of the gold making these big moves. And then when it went down, they could do what? The people, again, the Society Generales, the people who are kind of in control of this, can then do what? Sell the puts. So now what they're doing is they're selling the calls at the highs with the idea at expensive. Again, when gold looks like it's going to break out, they can go in and sell those calls at a premium. When it goes down, it looks like it's going to break out to the downside. They can sell those puts at a premium. So they can make a lot of money on both sides. They can sell the calls, they can sell the puts, and they can create these collars around the market. And they can make a lot of money off of this. Because why? Because there's a lot of fear out in the market. There's a lot of fear, right? From a central bank perspective, from a country perspective, these BRICS, right? That whole concept that I don't think really holds much weight, but nonetheless, people still like to keep bringing it up. The whole BRICS thing, if Brazil and Russia and India and China and South Africa can get enough gold and silver, can they make a currency that's going to compete with the dollar, right? That's the story. And what's the play around that? I just, like I said, we've been through that many times. I don't really believe that. But what I do believe is that these big banks would love nothing more than to be able to manipulate this thing for a while, okay, and get huge amounts of premium from the options from this, okay? And we've been talking about this from an asset perspective. What happened on Friday? Let me just talk about this too. Let me double back a little bit and link this to stocks. Okay. Not last Friday, but the Friday before. We saw 10:57 President Trump come out and drop that post on X about China. Market goes down, closes the week in fear. Sunday night, the markets open up, it gaps up, and now the chase is on to the upside. And then what do we get? The next Friday, we get another event, right, that drives the markets down in the morning, pre-market, okay, down into those levels again, that's 65.74 in the S&P, okay. And then we get another event, right, comes out Sunday night, and the market's off to the races again to new highs. And what is this doing? It's causing the institutional investors, okay, what they call the buy side, right, the fund managers, the hedge funds, the active money, right? Active money, okay? Maybe not, and maybe non-active money that's being forced to be active. Why? Because again, they have to meet their benchmark by the end of the year, okay? The same thing can be going on in gold. But here's what I want to point out with the stocks while we're on it. And then we'll go into the stocks and take a look at the charts. But that's one Friday, another Friday, and what do we have this Friday? We have the CPI data coming out this Friday, okay? So we've got the roulette wheel, all right? Is CPI going to be higher or lower? We don't have no lead in. We have no on ramp. We have no off ramp. We just get this one data point. Okay. We got red or black, right? It's very definitive. Now, if it comes in and it just meets expectations, whatever expectations are, okay, great. No big deal. But we got 3 Fridays in a row, okay, where this is happening, Remember at the end of 2024 when we were talking about this, right? The DeepSeek deal. Okay. Then we had this. Then we had, the tariffs, right, on Canada. Then we had the tariffs on this, right? So it was each week, it was same kind of thing happened. Okay. Almost like a signal was being sent to players in the market. Then we get the Friday. We got another Friday coming up. Is there a signal being sent, okay, to the equity market investors? And think about Society Generale. Is there a signal being sent at this 4,400 level? Okay. And so that's what we want to pick up on. These are the kind of things you can watch Bloomberg, CNBC. They're not going to think this way. Am I right? Maybe not. But I'm just seeing this pattern. Okay. Friday to Friday to Friday. Society Generale guy comes out and says 4,400 in gold, and sure enough, sure as can be, we see this and down for 200, up 200. 200 is a lot of movement. That will shake people loose. Okay. Again, if you've got fleas trying to ride and they will shake them loose, right? They'll whip the tail and shake them loose. And so they're shaking people loose and they're creating fear. So this faster money, right? This active money, they have to respect this $200 level. And what are they going to do? They're going to be buying call options at the top for a breakout to 5,000. So think about this psychologically. You're like, okay, gold could go to 5,000. Sure, it's within reach, right? We saw $150 moves in gold day after day after day, right? Just maybe not day after day, but we saw some pretty significant $100 moves. We saw 3,200, then we saw, or 40. What did we see? We saw like, what was that? What were the numbers I was saying? I want to say, anyway, we were going through that. Like, it was like, let's see if we hit, I think it was 4,300. That's what it was. We were at 4,180. And I said, let's see if we get through 4,200 and we go to 4,300. We could do that by the end of this week. And it happened in a day. Okay. So the point is, this market's moving and moving and moving and moving, and people are chasing and chasing and chasing and chasing. And now it's going to stop. They have recency bias where they're going to think, okay, is it going to break out to 5,000? If it does, I need to be on that. Okay. So the fear is there to do these calls and puts, right? Buy the calls, buy the puts on both sides. And the movements are big enough that they may have to do this. So hopefully that makes some sense, right? So there's lots of fish in the sea, right? You got whales, you got sharks, right? You've got dolphins, you've got squid, and then you've got little minnows, right? Everybody's kind of fighting for themselves, right? The little guys pull up, and they're in schools. The whales tend to move separately. The sharks, sometimes they'll pull up, but sometimes they hunt separately, right? The dolphins usually are in packs, right? Looking for squid, right? And then the squid, are they usually? The point is, there's all different types of fish in the sea. And are they going after not so much the retail client right now, but, the sharks, okay? The active money. Okay. And are they shaking them loose? Everybody, again, everything has its day in the sun and everything has its day in the shade. And the question is, are these active money fund managers now in the focus? Are they in the crosshairs? And they're the ones that are going to get attacked. So what does that do for us, the retail? If you're active, if this 200-point range is going to work, okay, there are things you can do around this, right? You can. It does require being active, and I'm not sure everybody wants to do that. But if we see this continue, I guess here's a way for people who are looking at this longer term. If you see this happening, you could potentially, if you have $100 and you want to buy 2 ounces of silver, right? When it goes down to 4,200, you can buy 2 ounces of silver. If it goes to 4,400, or for instance, gold, right? Gold and silver should track pretty closely. So let's say we find a level in silver that's mimicking this, right? We say, okay, I want to buy 2 ounces of silver. So I'm going to buy $49 or $50 an ounce. And it goes to 51 or 52. Sell one, right? It comes back down to 49 or 50. Whatever this range it gets established, right? You can start to build up. Buy 2, sell 1. Comes back down, buy 2 more ounces, sell 1. Comes back down, buy 2 ounces, sell 1, right? So now if you get out of all that, you now have 3 ounces of silver, okay? And you've traded that range and you've gotten out of some of it. So you're actually bringing your average price below that $49 or whatever that range is. So maybe that's one way to look at this, okay? It's fairly simple. You can do other things, right? You can start to look at the gold and silver ratio and start to, buy the gold, sell the gold, buy the silver. Buy the silver, sell the gold, right? Different ways of doing it. Or vice versa, right? Buy the gold, sell the silver. There might be times where you want to play the other side of this range. And so hopefully that makes some sense, right? I want to go, who's in focus? It's not the retail trader at this point. It's someone bigger than that, I think, okay? Because we're seeing the game being played at a higher level. We're seeing the potential for them to start writing these calls and puts, okay, because it's big money for them if they can do this on a big level. We're seeing this Society Generale guy come out and his level's holding, okay? And again, not that I care. It's just, do they know something? Are they going to help establish a range? Okay. And I would say very few people know this level because people aren't paying that close of attention. But that word trickles around to those analysts, right? It's kind of like when you're in your field of expertise, you get word of things, right? People around you may not because it's not their area of expertise, but people are knowing if this 4,400 level is going to hold, it's already moved throughout the system at that level, okay? And so for the retail client, for us, we can take advantage of this if we see that, right? And that's my whole take on this thing. Okay. So that's the gold and silver. Hopefully that makes some sense. We can make this super, super complicated, right? We can get into, there's deficits in London and London's a big exchange and, all these things that can go on. And this gold is getting tagged some more. Let's take a quick peek at this and just see what's going on. Yeah, so it's getting hammered here. So again, it looks like they're taking it that 4,200, right? They're at 42.34 right now. They're probably going to, within minutes, maybe within seconds, right? They could have it at 4,200. And so the question is, are you willing to step in there after a 200-point sell-off and buy it? Well, how do you know? Well, there's some memory there, right? At least it's a spot where you're wrong. It's like, okay, it gets down to 42.10, 42.15, maybe you buy some. Gets down to 41.80, 41.90, maybe you buy another one. Okay. And then if it doesn't work, you got to start getting out because something's not right. But if it works, that second one you bought at 41.80, it goes back up to 42.20. And now you get out of that one and you sit tight for a little bit and look for another spot to come in and buy another one. Then it rallies and you're trying to position for maybe another move to 4,300 or 4,400, something like that. Okay. If this range is going to hold. So hopefully that makes sense. And again, like I said, we can get so complicated in this thing. We can get into backwardation and who's getting this and who's doing that and who needs silver and, who's supplying silver. And right, you could get so complex that you don't even know what, you're so locked up in too much information, right? Sometimes it's just that simple, right? The guy comes out, tells you 4,400, it holds, it's held twice, and that's what we do with it. So hopefully that makes some sense there. Hopefully that boils it down. I don't want to oversimplify it, but I also don't want to overcomplicate it. Okay. Let me see what we've got here with why I'm not seeing stuff on this. Probably just because the range is so big. Okay. Yeah. All right. So I think that's good. All right. Let me keep rolling here. Let's go back and look at this. Hopefully that's our spot. No. 4 or 5. There we go. Okay. Okay, so there's the gold silver. I wanted to make sure we got to that. And then what we have is this Australia deal, okay? And then we'll look at some charts. So there's a rare, again, the Prime Minister of Australia was in town with President Trump yesterday, and they struck up, I think it's an $8 billion rare earth minerals deal. They may announce it here. I don't know the actual dollar value of it, but here we go. Here they are talking through this deal that they just structured.
We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months. And it was sort of good timing that we got it done just in time for the visit. And we worked together very much on rare earths, critical minerals, and lots of other things. And we've had a very good relationship. We've been working on that for quite a while. In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them. They'll be worth about $2. But in the meantime, we're working with Australia and other countries. They're working with us too, but other countries also on that. But we're really working on anything having to do with military protection, military ships, vehicles, guns, ammunition, everything, the whole thing.
Today's agreement on critical minerals and rare earths is just taking it to the next level, seizing those opportunities which are before us to take our relationship to that next level. And it's been fantastic, the contact that we've had together, the friendship that we've developed. And Australians love America, and I think Americans kind of like Australia too.
Sure, we do.
And as we go forward, I think that today will be seen as a really significant day in our relationship. So thank you very much, Mr. President.
Okay, so we have some good comments in here, and boy, this thing just keeps getting me, doesn't it? Just keeps coming back. Okay, and all right, let's go. Let's go to this one. Okay, there we go. All right. Always an adjustment to be made. Okay, some good comments in here. Before we get into that, I want to go through good morning, BDG. Yeah, good morning, Geo Rich, Rachel. Let's see, Gordon, good morning. Every day is debt day for me. Okay, yeah, that's so true. All right, good one. TZ Burton, good morning. Frank. Okay, true that. I mean, there must be intel on the boats. Yep, so I think so. Let's hope so, Rachel. You know that there is good intel on why they're blowing up the boat. So that's back to the one with Rand Paul. Venezuela is involved in stealing elections. Yep, we know that for sure, right? That's where a lot of these voting machines got their start. Okay, when they really kicked that stuff off. So that's a good point. So here, David says, I was in Brazil when Biden sent the CIA to rig the elections for Lula to beat Bolsonaro. Wow, that's interesting. So if you got, I mean, give us some more info on that. That's pretty interesting. Yeah, if you that's really interesting. Okay, the CCP owns Lula. I agree with that. The does the CCP own Biden? They probably did. I mean, I think that's. I think everybody owned a piece of Biden, probably. Um, I don't know what you really call him. I mean, he's like Gumby and Pokey all in one. It's like you can bend him wherever you want. So it's like, anyway, okay. So then we've got TZ Burton. I was in the Navy in the 90s. We boarded boats in South and Central America back then, and I'm sure we have been doing since. Yeah, so and that's what Rand Paul's saying. Normally you board the boat instead of just torching it. Now, it's sending a message, right? That's the one thing we know for sure is they're sending a message because boarding boats doesn't get play on TV, okay? But blowing them up does because you can run it again and again and again. It's kind of like Charlie Kirk, right? They show that shot again and again and again and again and again and again and again, right? As much as they can because it's almost to perfection, right? That bleed out was almost to perfection, okay? And this is almost to perfection, right? You see nothing, a little boat cruising through the waves, right? It's small enough that you can see it going up and down, right? It's gone, So that plays well in the mindset. I don't know if I'm not saying that I like it. I'm just saying that it plays well from a media perspective. You can run it again and again. Okay, then David says if gold reaches 57.90, yep. And so you've been watching some people out there who are throwing out targets on this to reserves that match a total Federal Reserve Bank fiat, aka the dollar. Yep. So again, a good point. We can get into that. We probably should get into that. But now it's getting a little heavier. Is that the tipping point? And if you can add into that too, David, what you mean when you say the tipping point, are you saying 4,400, 4,200 is a tipping point? Or are you saying that 57.90 is a tipping point where if, again, how many ounces of gold does the U.S. have? Does it match the Federal Reserve and their holdings? But then how does that impact the debt? Remember, it's still a small portion of the debt. Are they? So here's a couple questions to ask. I don't know if I have the answers to, but but we're working toward these answers. Is if they, the debt's 38 trillion. Let's just say. So we're talking 1.5 trillion or something like that, maybe 2 trillion. So does all this do is allow them to be fiscally irresponsible for a longer period of time? Okay, just continue being fiscally irresponsible by revaluing the gold, okay? Is there something bigger in play here with the Federal Reserve, okay, trying to displace them? Is there, is there a global play here with the digital currency, okay? The backing of the dollar, the connecting of it to some sort of a digital currency, to a stable coin. Man, there are just so many reaches out there at this point, and it just, again, it gets complicated, right? It gets complicated. So but we'll keep talking about that stuff as it unfolds. Agree with you on Brazil and Biden. Venezuela involved also. David Rocket concur on Venezuela interfering in U.S. elections. Okay, TZ Burton, I forgot we use Coast Guard personnel on Navy ships to actually board the ships. David Rocket, Coasties rule. Jay White, good morning. Crash and Splash, good morning. Please hit thumbs up. Thanks, Jay White. 57.90 could be the tipping point for ending central banks globally. Yeah, so we need to get into that. Like, that's what would happen next? I guess what would be the next step, right? That's what we need to ask ourselves is if that's the case and 5790 is some kind. Here's our question. Do all they have to do is throw out that target and throw something out there in this space? Okay. We're talking about who are they going after? Okay. The vast majority of people have no idea what you're talking about, David, but it's the right track, in my opinion. Because if that's the case, then the let's leave it at that. Let's come back to that. But that you're on the right case. The questions I would have are these. Who's driving it to that level? Okay. Who's been given that information? Is this just a calculation that the system has made? Okay. And why are they going after this concept of how would you take down, because they can't do it alone. Okay. The government tends to, that's why they do false flags a lot of times, right? That's why they do what they do. That's why they're potentially doing what they're doing in Venezuela for a regime change. Okay. They have to kind of on ramp you and then off ramp you. Okay. And so are they doing that with gold? Did they release this information? Does somebody get wind of it? Okay. And if they do, how do you take gold from, 1600 or 2000 or 2500 or 3200 or 4200 or 4400 to 5790 with minimal disruption? Okay. And create continuity as you do that, because these things are all connected, right? And then how do you get assets? Like, where's all the money come from? So you've got all this money going into stocks. Our stock's going to go to new highs because why? Because we're bringing interest rates down to 2.5%. Our stock's going to go to new highs because of that. What's going to happen to the debt market? Okay, interest rates are going to go lower, so you're going to extend. So now you're going to be able to refinance your debt because of that. Money's coming out of those things into gold. Gold's going to 57.90. You can start to make a case for, how do you hold assets up, stocks up? How do you get interest rates lower, okay, and lock them in at that 2.5 terminal rate? And then how do you transfer that money into gold, okay, so that you can displace the Federal Reserve? And then the question is, who's going to control this stuff once it's all said and done? Okay, the Federal Reserve we don't even know, we don't even know who's really running the Federal Reserve. Is it the Bank of International Settlements? Is it the banks in the U.S., okay, that actually have the control? Like, we don't know who's pulling the strings, and maybe there's a battle that goes on. Like in 2008, maybe there was a battle that went on between the banks, the big banks, you've probably seen the shows or the movies or the small, shows where you see all the bankers sitting around, you see the ones who are playing the Jamie Dimons and the ones who are playing all the different bankers of the time that were in there when they were negotiating this whole thing about how they were going to get us out of this real estate crisis. And again, Hank Paulson was there. Nancy Pelosi was a big part of it, right? And then we had, Ben Bernanke, okay, this whole crowd. And so again, we can go on for hours on this stuff, but the key is who's actually running the central bank? How do you displace it? Does this removal of Jerome Powell and putting someone else in there, is that part of this whole thing? Is it timed out? Now we're into the white hat theory, okay? And I guess with all that in mind, circling back to the healthcare, when you watch the healthcare stuff, and if you get a chance, go back and watch Aaron Day's presentation last night on this, because I think it gives us that angle, because a lot of us come at this from the political angle, or we come at it from a free speech, freedom of religion angle. Some come at it, we're trying to come at it from the financial angle. Then there's this healthcare angle, and you really look at it from these different lenses, and you're able to get a deeper look into what's going on. And when you look at how they've orchestrated this healthcare system against the people, and he makes a really good case on it. It's hard to argue with it. And, when you look at that, you're thinking like, is there really white hats coming to save us, or are they displacing the system for a technocratic rule? Okay. Are they putting this in place for digital currency, central bank digital currency, even though they say that the Genius Act and the Clarity Act weren't going to do that? Are they setting things up for some sort of technocratic rule? Okay. And that's what's concerning. So that's why we're trying to look at this from different angles and figure out what's going on. But you're asking, those are the right questions, I think. Stock market, debt market, gold. What's going on with gold? What's a tipping point? Is there a tipping point? And then it's just, there's so many things. All right. But those are good questions, and we'll come back and do that stuff. Okay. David, U.S. Treasury. 57.90 could be the tipping point. Yeah, so if you could elaborate on that U.S. Treasury, that'd be great. I'll come back and take a look at that here in a second. Okay, so let's keep rolling here. We've got this. We have, okay, the Australia rare earth minerals deal. That's what we just went through on the clip with that. This is a big strategic play, that rare earth minerals, because remember, the Australia, who has provided all kinds of stuff to China to make cheap steel and other things, they've now made a deal with the U.S. So again, this is that constant pressure on China, right? Again, back to the tariffs. It's not just the U.S. against China. Like in Trump 1.0, it was pretty much U.S. versus China. This time it's been, let's set the stage for the world against China. So we saw that with the tariffs. Okay, that seems to be the approach with the tariffs. And then we see it with the rare earth minerals, right? Making China the bad guy. Okay. I think the stage was set for China to have control of all this stuff, right? And the Bidens and the whoever else, again, whoever China is, okay, whoever's, back to, again, Brzezinski, Kissinger, Old Man Bush, Bill Barr, and everybody who's come since then, who's driven this. China is, the up and coming economy, and driving this foreign direct investment in there, driving the consulting firms to move U.S. manufacturing there, right? Driving all this stuff into China so that China can be controlled and it can be the next financial capital of the world. Is that what President Trump is trying to get around? Okay, is not letting that happen. And what do? You gang tackle them, right? If you just make it U.S. versus China, it's going to be a hard thing to win. But when you make it the world against China, and that's what we're seeing here with Australia, this is a big deal. One, just to get access to the rare earth minerals, right? And so I think, I don't know, I think this might have it on there. Let me just go back and show that real quickly. It doesn't have it. I thought maybe that had the thing on there with China, but it doesn't. Okay. Oh boy, sorry about that. Just flying all over the place. Kind of lost my bearings without this other thing on today. And sometimes it just loses connection with the network. I have no idea why. Okay, so so that's that. And Australia is big, right? I think they're the fourth largest. I want to say that it's China, and then I forget the numbers. I saw a thing out the other day about who ranks in terms of these. Again, it's never like just straight up. Seldom is it straight up, right? It's depending upon how you factor things in there. But the point is this: Australia is a major player in the space. They're a major player in the rare earth minerals, commodities in general, and it tends to connect. Australia's always tended to connect market wise. The Australian dollars tended to connect to the gold market. And there was a period of time where it was great. If I had a harmonic signal in the Australian dollar and I had one in the gold market, you almost knew for sure, like once one of them breaks out, the other one's going to follow. And it was really great. That correlation hasn't been quite so tight in the last maybe 5 to 8 years. But maybe it's coming back, okay, with some of these moves. Anyway, that Australia deal is a big deal from an acquisition of rare earth minerals. And in there, I think it was either in that clip or another one, President Trump said, right now everyone's so excited about this, these rare earth minerals, and they're so expensive. He said in a couple of years, they're going to be like $1 for these things, okay? So again, this tells you that the control factor, that like crude oil, he proved this with crude oil, that the world said, oh, there's not enough crude oil, there's all this scarcity, there's all this fear. And then what did he do? He got so much crude oil out in the system and took it to negative $40 a barrel to prove that there's plenty of crude oil out in the system, right? We see this with the shale oil and the gas, natural gas. There's plenty of this stuff out in the system. But again, the World Economic Forum, the climate change guys, right, the environmental social governance, they all want to try to tell you that there's a scarcity and that the people are the problem, okay, so that they can redirect all the assets to them. Okay, they want to lie to again. They want to tell us the cows are the problem. This is the problem. That's why you need to eat this fake meat, Beyond Meat instead of regular cattle. This is why they're taking the cattle population out. Why they take the chicken population out. Right? Again, it's control. Right? To create fear. And so, is that what he's doing here by opening these things up? Okay, so. And then this CPI, and I think we covered most of this. I do want to come back and talk about the CPI like roulette. I just want to drive this point home in the sense that the multiple rate cuts, right? 25 coming at the end of October, that's pretty much locked in. Then we have the 50 maybe coming in December, 50, so that's 0.5%. Then January, another 0.5% potentially, okay, sometime the 1st of 2026. And then what does that do? That puts us at 1%. That takes us down to 3.75 with the one in October, and that leaves us with one more 25 basis point rate cut to get from that 4.25 down to 2.25 to 2.75, somewhere in that range. So that seems to me to be where things lay out. if they did a 50 in December and a 50 in January, and again, what would the markets do? The stock market would rip, okay, more than likely. Would it sense fear? That's the other side of the coin. But at least initially, I think you get a knee-jerk reaction. And what does that mean? We've got these harmonic structures. So let's take a look at this. Let's go in and take a look at these stocks. So let's look at the debt market first, because I think I can just talk through this as we're looking at the charts. Okay, so here's our harmonic structure, okay, in the 10-year note, right? Again, I wouldn't call this by far perfect, because this thing goes all the way back to here. Let me just turn this purple so we can see it. So you can see where this thing came in, where this thing started. Okay, so this purple is where that is end of September. Okay, so we've been dealing with this harmonic structure. So I marked a lot of the yellow dots on here where this, markets responded to this harmonic structure. And the pink shaded zone's the breakout zone. Okay, so that's where we want to see the energy build up, okay, for this potential move, right? It's like plucking the string on an instrument, right, before the sound travels out. Okay, so then we get almost up to the halfway back in here. We make a couple runs at it, but can't quite get there. Okay, then it sells off. And I would say in this period right here, it's sort of lost in space. During this period, I'm not seeing hardly anything. Let me go to something light. Okay, I'm not seeing hardly anything in this space where it's reacting to the harmonic structure. It's not coming down to the 2/8. It's not getting to the halfway, but it is building energy. You can see it's building energy through here. Okay, and let me turn that to blue because that's typically how we mark that. Okay, you can see the energy building right in there. And what do we get? A release of energy. We get up to the halfway, spends a little bit of time there, breaks through, comes back and retests it. Then it goes up to the 6/8, right? The light blue is the 5/8. This up in here is the 6/8, okay? Then it comes back down, back to the 5/8, all right? Back down to the 3/8, right around in here. Let me mark this, okay? So it comes back down to the 3/8 at 113.12, okay? And now it's back up above this dark green line. So you can see the last four circles on here, this one, and this one, and this one, seem to be reacting again to the harmonic structure. Through this light zone back in here, I didn't see a whole lot of, wasn't getting the halfway, wasn't getting the 2/8, wasn't respecting the 3/8, right? It was just kind of lost in space. And there was, some trend channels in there that I think we looked at, a break above this, and it should push it through that level. Again, this dark green line is typically quite important, okay, in these structures, and we want to pay attention to it. Now, the full upside target on this thing is up here to this bright green line, 114.20. So let's take a look at that. Okay, this is this trend channel we've been working with for a long time. That bright green line is that same level, that 114.19, 114.20. It's looking, again, look at the prior high back in here. So if it breaks through that, okay, it's going to break this prior high, but I doubt it's going to break this thing back in here, this prior high. This was back in September of 2024, right around in here. This one was in April of 25. So this was earlier this spring. This was probably during the whole Liberation Day, the fear around that stuff, right? That spike. There's a lot of volatility in that period of time. Markets moving around. The 10-year note was actually moving quite a bit then. The point is, we're above the white dash line. That's our line in the sand, the 111.10. Okay, we've got an energy build marked by that blue box. We're following this trend channel as crazy as it is. You can just see it hugging that red line. Okay, it just hugged this thing for a long period of time because it's indecisive. It just doesn't have a lot of push behind it. A 50 basis point rate cut would give it that push. Okay, and why is the Fed going to do this? Right, that's the big thing. Okay. Why is the Fed going to do 50 basis points? The markets tend to look at usually 1 to 2 things at a time. They could look at 50 things, right? There's 50 different things out there that they could look at, generally speaking. I don't know if it's exactly 50, but you get my point. A lot. There's many, many things the markets can look at. Right now, they're not looking at inflation, partly because we don't have the data, partly because the Fed's, their two mandates are maximum employment, price stability. Price stability means low inflation. They haven't been able to get the inflation genie back in the bottle, right? They say their target's 2%. They're sitting up above 3%. They can't get it down there. So the markets have started to kind of ignore the inflation, the price side of this thing, and they're looking at the jobs, okay? And that's going to be their excuse. And so so employment's in focus, right? And it's not likely to improve, okay? Analysts are out there saying the jobs market isn't probably going to improve until sometime next year, okay? And then we even question that in here because AI, I mean, this thing's not going away. Is it going to start displacing jobs? Okay, we've seen layoffs. I think there's been a couple of big layoffs in Europe this week. And is some of this because of AI? Okay. We talked about India, the programmers, the H-1B visas. Okay. Are they able to displace those call centers and the programmers where we would outsource a lot of this stuff to with AI? It seems like we are. Programmers can now have AI write that code that they normally would have people from India writing it, and then they'd have to bring it back, clean it up, plug it in, check it, make sure it worked, right? And so now they can just have the AI write that and then plug it in. And they can kind of get to know the AI. They're like, that's my programmers are telling me that a lot of the AI code is pretty clean. Like they're looking at it and they're saying, wow, it's actually pretty good. Like it's doing a great job. Okay, so that kind of fits in with this employment thing, right? And the Fed's focus is on employment, or at least that's what they're telling us, right? And the other thing that these markets can look at is geopolitical. We've got the tariffs, we've got the rare earth minerals, we've got the China deal. Okay, we've got all this. We've got Venezuela, we've got South America, we've got Israel, right? We've got Russia, Ukraine. So all these geopolitical things. And so a lot of analysts are saying we're going to get a spike in oil. We'll take a look at the oil markets tomorrow on Energy Day, okay, and see where we stand on that, because we've said that, the general trend in crude oil is down. But when we start getting around this $57 range, we're probably getting max profit in that bear put spread, okay, or close to it. Maybe you want to take the max profit, wait for another opportunity to get in, okay, with the idea that this crude oil is drifting sideways to down. And that's what we've seen for, other than the attack on, or the taking out of the nuclear facilities on Iran, is crude oil market's been just drifting sideways down for a long, long time. Okay, so is that what we're going to see here? The geopolitical. So again, I think the two things the market's looking at is employment. Okay, that's going to be the excuse they're going to use to lower interest rates if they're going to go big rate cuts. And 50 basis points, big stuff. Okay, that's going to be, this isn't what you're hearing right now. Okay, again, Paul Tudor Jones mentioned it. That's why we ran those clips. Probably the biggest reason I ran those clips, because he was calling for a 2.5 terminal rate instead of 3. Okay, that's a big difference. Now they're starting to see analysts, few kind of, touching around the edges saying 50 basis points, 50 basis points. If we get 1, we're probably getting 2. So again, this is trying to prepare for this 10-year note to do what? To pop up to that bright green line and potentially pop through it. And if it does that, okay, what we're looking at is, move to here, and then can it get above? Does it retest? And from there, does this thing make that move? Okay, because that's what we're talking, is something like this, up to the upper end of this trend channel. Longer term, this fits, right? We're looking at consolidative pattern, like a wave 1 to 2 on that Elliott wave. I don't know. I can't actually show that today, really. Well, I can. Yeah, let me throw it in there and we'll take a look at it. So here we are on this Elliott wave. So we've seen wave 1 down in this 10-year note. Okay, we're seeing potentially wave 2 right now. If we get these lower rates, we're going to be moving toward that point too. Okay, are we going to get a wave 2 to wave 3? And when would that come? 2028, 2030, 2032, somewhere in that time frame would be that consolidative upwards trend channel, and then a move down to 3. If that's the case, okay, so again, back to this Elliott wave thing that we're trying to introduce in here. Okay, all right, back to back to the charts. There we go. Sorry about this. Okay, I'll try to see if I can't get that fixed. But this is that 10-year note. Again, gold, interest rates, stock markets. Interest rates, this market goes up, lower interest rates. Now, what's the downside to this? We talked about that. For a lot of for the federal government, if they're fiscally responsible, okay, and if right, they are going to use this gold play, right, to take out the Federal Reserve and offset that, okay, then we're focused on the debt. Right. And if we're going to focus on the debt and actually be responsible here, then what we want to do if we get this is the Treasury, okay, the Treasury acting on its own behalf without the central bank would want to come in and try to restructure its debt. Who's going to want this debt? Economies around the world that might be falling apart, right? Other third world countries or emerging countries, okay, that need to own. They need to protect themselves, so they would be coming in to buy some of this debt. Now, remember, if inflation's at 3.5%, 4%, and these interest rates are going to be at 2.5%, you're essentially losing money, okay, when you invest in this, because inflation's going to eat away at this. So you're really not coming out net ahead. This is back to a fear trade again, okay? The reason that this thing would do this is some kind of a fear trade or some sort of a. And so if the U.S. is going to issue this debt and it's going to come down to the stable coin, this is where it gets complicated. What's going on with the Clarity Act, Genius Act, stable coin, this whole issue and tokenization of things, right? There's a lot of stuff in play and it's too much to swallow at one time. We just have to keep chiseling away at it. So, with David's comments today on the 5790, I think great points. We need to come back and look at that. With the debt market, we're trying to do some of that today, right? If we get this lower interest rate, it's going to be bad for fixed income investors because they're going to be losing relative to inflation unless inflation comes down. But right now, it's not coming down. No one's able to get it to come down. What would make it come down? Those are the questions we have to ask, okay? And yeah, that's all. And that's what we'll continue to whittle away with, okay? And then what happens to the stock market? Here's the fear, is that here's my big fear from a technocracy angle, is that you get fixed income investors, okay, retired people or pension funds or insurance companies that come into this debt market, okay, or for a while, okay, because there's a price play here, right? Buying this treasury note and selling it up at the top of that trend channel is a good play for a lot of people. The problem is underneath just the market perspective of this, there's a degradation going on in terms of asset base, right? People just can't earn interest to keep up with inflation. So what do, right? They're going to be, and if the stock market's flying, where are they going to go? They're going to be enticed to go into the stock market once again. Okay, this is what we saw after 2008, right? We saw these interest rates at zero. In Europe, they were zero or negative. And what did it do? It forces institutions to go more risky, which is into stocks. Okay, so now they pile into stocks. And are we going to see inflation from an asset perspective? Right, stock market going up because of these lower interest rates and people piling in because they're falling behind again, okay, because interest rates are so low. So interest rates were nice when they were at 5% for a lot of people. If they're going to go to 2.5%, that's been cut in half, inflation's at 3.5%, 4%, something like that, people have to reevaluate everything, okay? So hopefully that makes sense, that looking at stocks, looking at debt, looking at the the gold side of this thing, and maybe the tearing down of the central banks, global central banks. Hopefully that keeps it in those three compartments, and it's fairly easy to at least get our head around. Okay. And then here's my bigger fear. Here's another fear to throw on that, just because we've talked about this, the private equity. I see them marketing private equity to the general public. Private equity's always been this little bastion, okay, for the elites, okay, the Washington elites, the Ivy League elites, okay, the people in the know, right? That they know somebody in private equity, so they get a job in private equity. Then they become a private equity monster because they're part of the club, right? They're in the club, okay? When they start trying to sell this to us, okay, the private equity, when the stock market, if it goes higher, right, they're going to sell this private equity to people too, because they're going to say, look at this great track record on private equity. We can now we can now democratize this for everybody, okay? This leads into tokenization as well, okay? And I'm going to leave it at that because hopefully for those of you who've been studying this, you probably kind of know where that's going. For those of you who haven't, we'll have to come back and do that and do some deeper dives on that stuff. Okay, so I think that covers it. Let's hit these stocks. Let's take a look at this stuff. So we've got the stock market. Let's introduce these new harmonic structures. All right, so this was our old one here. Okay, we had this move in here back to, so we had this upward sloping trend channel, another stab at the downside. Okay, it started to go up, came back down on this last Friday. Okay, came back down last Friday in the morning, hit the 65.74. That was an upside target on the harmonic structure from way back. Okay, then the thing rallies out of there big time. Look at how it's come right back to this trend channel. We saw this before. Not this Friday, not this one here, but this one back in here, okay? We saw the same kind of a thing. We saw a trend channel back in here, and then this market worked its way back up to that trend channel. I don't know if I still have that on here. It doesn't look like it. We've seen this thing before where this trend channel gets broken, okay? And then the market comes right back up to it right in here, right? So it's a new high, right? You can see it's broken this prior high back in here. It's breaking to new highs, but it's following this, and it can do that because this trend channel is moving up. So it seems to be maybe respecting this trend channel. Okay. And so I want to just lay that perspective out there. We've kind of seen this trend channel thing fail, but then still be important, right? And maybe that's what it's doing here. Okay. 65.74 up to new highs, still kind of hugging this trend channel that seemed to have really good responses all through here, down in here, up in here. Okay, and so forth. Now, the reason I show that is then what we're going to do is look at this new harmonic structure. Okay, we're kind of transferring it over. So here's a new weekly harmonic structure, and it started right in here. I'll put this big circle on it. Okay, this was last Friday. It's a weekly time frame. Now, it didn't trade the pink breakout zone. Red flag to me. Okay, it didn't build up the energy. It just took off, right? Sunday night, Monday morning, bam, just off to the races. Not a whole lot of respect for the harmonic structure yet. You can see a few yellow circles on here that I've drawn, but it just hit the 3/8 last night, and then it sold off back down to the 2/8 right here. Okay, right there. So it's starting to respect this level. Now, dark green line would tell us that if it can clear that and stay above it, then look, this thing's probably going all the way up to here. I don't have it marked on this, but you can see it's basically just double this, stack this on top of that. Okay, so you're talking about 67.14 to 60. Actually, I have the level here. I can give it to you. It's 6909. So it would be 6909. And then if we look at the Dow, I'll put these levels on there as this thing unfolds. In the Dow, we're talking about 47,800. Okay, let's look at the Dow now. So keep that in mind, right? We're taking the old harmonic structure, the 6574, still watching that trend channel. Okay, we're losing, again, 6574 is kind of a line in the sand, right? But now what we're doing is we're taking this newer harmonic structure in the S&P, and we're kind of rolling over to that, all right? Again, not losing touch with the 6574 as a backstop, but looking at this structure to see, like, what's going to happen at the green line, the dark green line. What if we come back into that pink breakout zone and it breaks through there? Problematic. It should, typically, these markets should trade in this pink breakout zone, build up energy, and then move. Okay, this one didn't do that. So there's a reasonably good chance that this thing could come back to that pink breakout zone. Okay, if it does, we're concerned that the downside's in play. Okay, now, what if it gets to the dark green line and can't get through? Okay, that's a problem. What if it punches through that dark green line, gets above it, comes back down, retests it, proves it can hold above it, then it's going higher. Okay, so that's how we're going to use this. It's a lot of that's why people say, what do you think the market's going to do? And it's like, I don't know, but I know how to navigate through it. Okay, and this is navigating through it. When someone says, where do you think the market's going to be at the end of the year? I have no idea, right? I can say, well, I can throw out a story, right? But it doesn't mean much. And even if you're right, like, can you really work your way through it from here to there? Over the next 2 months, can you really work your way through it? With this, I think we can work our way through it, right? We got the pink shaded zone, we got the dark green line. Okay, we're watching those two things, watching the harmonic structure, watching how it reacts to these things. If it punches through that dark green line, then there's a good chance this thing's off to the races. Okay, so let's take a look at the Dow because we have a structure in that one too. Hopefully I have that thing marked for us. I think I do. This is it, 47. Yeah, this is it. So same kind of a thing, right? Here's where we get the signal. It breaks out, comes back down, retests it, goes up, maybe spends a little time around the 1/8, spends a little bit of time around the 2/8, gets up to the 3/8, and it stops. Okay, comes back, doesn't quite come back to the 2/8. So it's locked in here. What's it going to do? Is it going to go up to the dark green line, 47,118? If it gets through there, where's it probably going? It's probably going to the full upside objective at 47,797. So basically 48,000 or 47,800. Okay. Is that right? 47,800 in the Dow. Yeah, that's right. So at that point, remember, if it starts to get through that, you can start looking at that big psychological level of 50,000. Why could this happen? 50 basis point rate cuts. Okay, we get 50 basis. This is why this 50 basis point rate cut matters. We get 25 the end of October. It's baked in. They're going to do that for sure. If they start putting this stuff out there, right? It's not out there. It's not out there all over yet. But this is why I'm trying to bring this to you ahead of time, right? If we start hearing more and more about 50 basis point rate cuts, then these markets can punch through that dark green line, go up to the full upside objective at 47,800. If it gets through that, then this big psychological target of 50,000 in the Dow is in play. Okay, so that's how we would see the cascading effect on the upside, the evolution of this thing unfold. All right. And we're just looking at, the 10-year note, right? The debt market. We know that it's potentially moving higher. Now we know why. Okay, the 50 basis point rate cuts. The constant pressure of the administration on the Federal Reserve, potentially the gold, that whole thing's in play with the Federal Reserve maybe losing power, maybe being dissipated. The effect of the stock market, can this thing run to the upside? It can. Now, it can also fail. How will we know if it's failing? If it moves back down into that pink breakout zone and it can't hold, now the game starts to change. Okay, so now and then we have to pick that up from there. I think that's good. Let's take a quick look at soybeans. I want to look at this. I haven't looked at that yet today. Let's go look at the NASDAQ, see where it's hanging out. It should be pretty much, again, it doesn't have a harmonic structure. We've got the earnings. I think it's a dangerous place to be. Is it breaking new highs? Looks like it probably is. No, it's retesting highs back in here. I got to clean these charts off. It takes so long for this. This should be instantaneous, but it's just, I've got so many drawing tools on here. So it isn't breaking the new highs, okay? But it is building some energy as I can see. All right. And we saw this thing that Friday before, not last Friday, but the Friday before. It came exactly down to the 24,165 where that pink box is at on the white dashed line. Okay, retested it. So this thing's in play. Let's look at this. So we'll keep an eye on that. Let's go look at this Russell. All right. Again, small cap stocks, small to medium cap stocks. All right. And hanging out above this 23,240 level. All right. So what happens here? I need to look and see if we actually have a harmonic structure here that we can work on. I need to make note of that today. I'd like to see if we have something in this. Okay. But keeping an eye on those things. Now, let's go look at this soybean market because, again, this will tell us, this will hopefully give us an indication if this deal with China is going to. I think President Trump and President Xi are meeting in South Korea. Is it next week? I think sometime next week, if I'm not mistaken. I think they have it scheduled for next week. Okay. And maybe that, I don't know, maybe that they're going to do South Korea and then he's going to go to Japan as part of a big circular trip, right? Meet President Xi in South Korea, kind of neutral territory. Well, I don't know if neutral. There's almost nothing neutral there anymore across that region. But anyway, neutral enough territory in South Korea. And then maybe he goes to Japan to meet Takaichi. That would make some sense. Okay. So that's what I would be looking for. All right. So on this particular thing, we saw it get down to the dark green line. It struggled down there. We know that soybeans are becoming more and more in play, right? If you've been watching, more and more people are saying soybeans is a big issue, okay, on this deal. We know rare earth minerals. We know the soybeans. And what's the other thing? There's another one, big one in play with China. The rare earths, that, and the chips, right? The AI chips. Okay, those are the big things in play. And then there's the whole defense thing. We know that that's always in play there, right? And that's part of the tensions that will be there with South Korea. Okay. All right. So again, watching this dark green line, I'd love to see it get down to the bright green line. That would be a great spot to take a shot at it because the energy's dissipated and it's a low risk spot. If we get that down there at the 976, that would be a great spot to buy soybeans. And with the idea that you'd be trying to start building a position in there going into 2026 and the planting season in 2026, right? So this would be a 5 to 6 to 7, 8 month hold. And you would just try to slowly chisel away at something like this, right? Buy some, sell some, buy some, sell some, every day, every week, every couple weeks, whatever your time frame is, but you'd be looking for those opportunities in this. If we got that full downside, that would be a nice situation, right? You don't always get those. If it moves back to this pink shaded zone, we know that the odds are that they're going to get some kind of a deal. It's going to involve soybeans. Soybeans are going to be happy. All the soybeans that are going into storage this year from all the farmers harvesting right now, they're going to have a place to put it, which is going to be in China. What's that going to do to South America? It's going to take away some of the purchase and the power that China has exerted over South America. So hopefully that connects some of this stuff. And we can really think about gold, bonds, debt, and stocks and things like this, okay, and how these things tie together. All right. With that, I think we hit it pretty good today. And if you get a chance, check out this the Technocracy panel. We're going to do that tomorrow. I think at 6:00. You can either find it by looking up Courtney Turner, so it's COURTENAY, Courtney Turner. I think she hosts it, and then Aaron's probably going to host it. But I think you could just go into Rumble or YouTube or someplace and just look up Technocracy Roundtable and find it. It should be good, right? I mean, these people are I'm probably the least equipped out of all of them to talk about this, but I'm going to try to do my work today on it so that at least I can bring the financial angle to it. And then, if you get a chance, check out Aaron's stuff last night. I thought it was well done, very concerning, But if we don't look at it and we don't address it, then we never really truly get health freedom. And we're definitely not headed toward health freedom, even though the Maha thing appears to be moving in a good direction. Aaron pretty much shot that thing to smithereens last night of that it's not as what it appears to be. Okay, so with that, we'll come back and deal with that. Maybe I'll talk a little about that as I prep for tomorrow and tomorrow's show. And tomorrow's Energy Day, we'll come back, take a look at crude oil and stuff like that, natural gas. I've got so much stuff stocked up on energy. I don't know how much I'm going to be able to unload tomorrow, but we'll do our best, right? We'll try to put it in some kind of context and take little bites. All right, have a blessed day, everyone, and we'll see you tomorrow. Thank you.
City was gone. There was no train station. There was no